Ladies and gentlemen, welcome back to the Future of Money Virtual Summit. My name is Ryan Andrew Peterson. I am the CMO of Conscious Marketer, and we are co-producing this event. On the line with us tonight, we have Brad Hart with John Tarr, and they're going to be talking about looking forward to the future of crypto and blockchain. John will be introducing Brad here in just a moment, but I just wanted to take a moment and say that for all of you who have been engaging with us on the live videos, asking questions, giving feedback, we appreciate you, and we want to thank you for showing up for this summit and being a part of it. The truth is, we couldn't do it without you, and we're super grateful. You know, a summit like this, it's been an adventure. It's been 10 days with 4 or 5 talks a day, and it really takes a commitment. You know, it takes a commitment for us, but it also takes a commitment for you to show up and support us. So thank you. And this is the last talk of the last day of the summit, but it's not over. The team and I, we were just talking, and we are going to do like an encore day with the best speakers of the summit. So look for an email from us announcing that encore day. And then the last thing before I turn it over to John, there are share buttons under this video for Facebook and Twitter and Google. If you click those, you'll be able to share this with your friends and family. And even though it's the last day of the summit, it's not too late to sign up. Your friends and family can still come on and access the talks, a lot of the talks, and purchase the recordings. So please share this information. Social media is not allowing us to advertise right now for cryptocurrency stuff. So however you can help would be really great. But without further ado, John, why don't you take us away?
All right. Hey, everybody. Welcome back. It's John Tarr. And as you probably know, I'm an investor and entrepreneur and founder of Totally Crypto. Super excited to be back here with Brad Hart, who I'm going to introduce in just a second. But I want to remind everybody that the content of this summit is provided for informational purposes only, and is not intended to provide any specific tax, accounting, legal, or other investment advice, or provide the basis for any financial or investment decisions. You should always consult with a licensed professional to seek advice specific to your own situation. Also, want to remind you that it's coming kind of winding down here. This is our last talk, and we've got our cryptocurrency training kit. That special offer gets you all of our speakers' recordings. That's 40 hours of talks, 25 plus speaker bonuses. That's transcripts, PDFs, videos, and a program that Roger Bryan and I created called the Cryptocurrency Mastery Program. The regular price of that after the summit will be $497, but you can get it right now for $297. In my opinion, it's just amazing. The content of this summit and the speakers are amazing, and I'm humbled, as I said before, to be with such thought leaders and visionaries. So pick that up for $297. Now I'm going to introduce Brad. I'm excited to talk to Brad. I think you will be too. I loved his bio, so I'm going to read it. Brad Hart accidentally tripped, fell, and face planted into the cryptocurrency space in 2009. Can't wait to hear about that. All the coins he did manage to buy, he lost along with his chance at billions. So bummer there. He continued to hone his investment skills while spotting and capitalizing on trends. Brad managed to see the 3D printing boom coming, landed in Forbes 3 times, which ultimately led to running a hedge fund, which returned 106% in 2013. After winding the fund down, Brad circled back and tapped his network to learn about cryptocurrency and blockchain, getting back in early enough to see 150x returns in Bitcoin, 100x in Ethereum, 25x in Litecoin, and 12x in XRP. Today, Brad is teaching the lessons learned over the past 9 years spent in crypto land and spreading smart investing skills to everyone inside the Make More Marbles cryptocurrency course, which just launched this month. By focusing on sound investing and trading principles, Brad hopes to cut through the noise and hyperboil in the marketplace to help anyone become a solid, rule-based investor trader in crypto and beyond, while avoiding a lot of the pitfalls of the space. His articles have been read over 1 million times. His mom read them 999,000 times. I'm kidding. That's a lot of times.
Thanks, Mom.
Yeah, thank you, Brad's mom. And he can be found at makemoremarbles.com, where he shares daily insights on entrepreneurship, investing, giving, and life. Brad, welcome, man.
Thank you so much, John. And I just want to first say I am humbled and honored to be here and to be among such wonderful speakers. I know I'm the last, but I hope I can deliver and over-deliver for everybody here and answer a bunch of great questions that I'm sure everybody has. But yeah, incredible job so far. Thank you, everybody who's shared so far, and I'm really grateful to be here.
Yeah, and just a reminder to everybody, Brad, thanks for the reminder, because I'm terrible at reminding people to comment and ask their questions. I'm like a mic hog over here. I get excited talking to people. So make sure if you do have questions for Brad as we go through, make sure to comment and ask the questions, and Ryan will send them over to me. So Brad, our first question that we've been asking all of our speakers, and one of the things I'm going to say that I normally say before we go live, but I'll tell you, we've had 50 some speakers, as you know, you've been following the event. Everybody's got a different perspective. There's no right or wrong answer. We're all just jamming, and a lot of smart people with different perspectives. So I want to get your perspective. How do you think crypto will influence the future of money and the world? What's your thoughts?
Well, really quick, I think that anytime you can introduce a system that serves more people, it's a better system. And the way that cryptocurrency, more importantly, blockchain serves more people is because it can decrease friction and increase trust between parties that want to exchange, right? And anytime you can do that, it's going to be a system that scales. So now you don't have, like a check is 4 ledgers. You don't have a credit card company, which is 3 ledgers and a third party in the transaction. Now you have peer-to-peer currency, which has never existed before. And as we go along in the future and we see more applications of this, because, crypto is really just the thing people are excited about right now, but the implications of blockchain in multiple industries is going to shift the world. I see a lot happening, and I see the banks getting involved. I see them making key acquisitions, Goldman Sachs with Circle. I see JP Morgan throwing their hat in the ring through a few twists and turns, which are really funny to me because I see them trash it, buy a bunch, and then come back out 6 weeks later and say, oh, by the way, business blockchain, and we were wrong. Sorry about that.
Yeah. Oops.
The cryptos, who knows, right? It could be huge in the future. It could be nothing in the future. It will definitely evolve. It will definitely change. I always like to say, if the cryptos are cars and blockchain is the road that the cars run on, that Bitcoin's like the Model T. And we have yet to see like a Tesla. We have yet to see the sexy, sleek, futuristic one that's going to, dominate or rule them all. There is no Amazon in the space or Facebook in the space or Google in the space. It all yet remains to be seen, and it's still so early. So it's hard to speculate, but I truly believe it's a revolutionary technology for a lot of reasons, mostly because anytime you can increase trust and decrease friction between parties, you're helping people add more value more quickly.
Awesome answer. And we've got a bunch of talking points to hit. But before we do that, I've got to hear this 2009 faceplant story. How did you get in crypto originally?
That's a great question. So, God, this is going back almost 10 years. So in 2008, I was making apps for the iPhone. And back then, the iPhone had just launched. It wasn't every day that we had a supercomputer in our pocket. This was pretty new at the time. And you could basically code a long essay on a topic and pay a guy like $300 to go and code it, and you'd upload it to the App Store, and it would make $1 or $2, per sale, thousands of times a month. So I was making really decent money for a 22, 23-year-old kid, whatever it was. And one of the apps, I got a call one day or an email saying this company, Driver Digital Media in New York, said, hey, I want to buy this app. I was like, that's kind of cool. So I went in, I talked to them. They were in Chelsea, and I negotiated the deal myself. They said, we'll pay you $5,000 for this app. I'm like, boom, take it. Awesome. Have so much fun with it. I was just so excited that I built something that somebody wanted to buy. So I was just like, whatever, okay. So that was a lot of money to me at the time. And I went to the coding kid and I had a word exchange. I said, listen, what would you do if you had all the money in the world to code an app? What would be your dream app? He said, I would create a Bitcoin trading app. I said, what the heck was Bitcoin? I didn't know. It was 2009. So I started Googling around and messing around. I don't know if we can curse, by the way. I don't want to drop any.
Curse away.
Okay. So yeah, I'm like, what the F is Bitcoin? And I looked it up. I was like, this sounds pretty cool. And I decided to give him the money to code this trading app, $5,000. And he was trying to build Coinbase basically on a shoestring budget. He failed miserably, burned through half the money, gave the rest back. He's like, I'm sorry, I don't know what I'm doing. Had I just taken that $5,000 and put them into what were 5-cent Bitcoins at the time, I'd be worth north of $1 billion with a B. I mean, it's a staggering amount of money when you consider all the forks and everything that have happened since then. So I didn't get in that early, but I did manage to get in fairly early, and I lost some and I made some, and I got out too soon on a lot of it and held a lot more. And, I managed to turn 4-figure investment into a very respectable 6-figure investment. It's gone up and down a lot, but, I'm pretty much a crypto lifer at this point. I'm taking all my money off the table as far as, principal, and now I'm just playing with house money. I'm just going to let it ride and see what happens.
Yeah, awesome, and that's a cool story. Tell us about your hedge fund background a little bit. I think that's interesting.
Yeah, thank you. So the whole story, if you want to hear it, is I was really geeking out on 3D printing back on the day. I would say about like 2010, 2011, I was learning about it. By 2012, I had geeked out on it completely. Like I was one of the foremost, at least in my mind, like experts of all the people I talked to. And I had this opportunity. I remember I was laying in bed one day, I was scrolling through Twitter, and there was this like charity event with Richard Branson going on the next day in Miami. I'm in New York. And I just remember like being there, looking at it, like I got to go and meet Richard Branson. Like just came over to me. And I'm like, I'm going to do it. I bought the ticket. I got a nice pair of clothes on. I jumped on a plane. I went down. And literally the next day, I'm shaking hands with Richard Branson. And it was so freaking cool and surreal. And we're in this tiny little room in the Versace mansion in between two parties going on. One was for the Free the Children gala, banquet, whatever. And the other one was for the 25th anniversary of Virgin America. So Richard comes into the room, and, I just expect to be this, see this dynamic rebel billionaire. He was actually pretty nervous, I thought, like looking, and he took like a few breaths to steady himself, and he started walking around the room and shaking everybody's hand. And, the whole, everybody's attention starts going to him. And when he quieted everybody down, he looked around the room and he said, all right, if you're in this room tonight, it matters. I don't care whether you're just starting out. I don't care if you just sold your company for $1 billion. I want to hear from each one of you what you're most excited about right now. And I still use that question this day because it's a great question. What are you most excited about right now?
Yeah, it's great.
And we go around the room, and it got to me, and people are talking about how they sold their companies and how they raised all this money and how they did all these different things and they wanted startups. And Richard's like, okay, email me about that. Okay, email me about that. I'm like, that's really interesting. But I didn't know what I had to share with this man. He's a billionaire, and I'm just this kid, right? I may have been 24, 25 at the time. And he got to me, and I just start geeking out on 3D printing. I talk about how it's going to change the world of manufacturing, how we're moving from a world of mass production to a world of mass customization, and how I think that's a really cool thing. I've always spotted these trends of how things are going to go. And he stopped and he said, that's really great. Let's work on that together. I want to learn everything you know about it. Email me. And my heart like dropped in my chest. And like, okay. But I didn't know how to deal with that. Like, I didn't know how Richard works and all this stuff. So I didn't get his email from him. Stupid move. I tried to go to his assistants afterwards, and I was like given the face palm basically. And they were like, not having it. However, we did raise a bunch of money for charity, and it was a really good experience. But I learned a really valuable lesson. Don't ever invalidate your ideas or think that they're stupid. That was really the first time when somebody like that, like, blew me away. Somebody I always looked up to, and I'm sure a lot of people here would too, and validated one of my ideas. And I'm like, wow, that's amazing. And then secondly, don't ever feel like you're too, unworthy to speak to somebody or to be in the same presence as somebody that you admire. Because, that could have changed my life if I had just said yes and gone after it in the way I should have, and I would have now, many years later. And that's all fine. We got reconnected later. But the moral of the story is, always put your best idea forward and always get in the right rooms with the right people. So I come back and I relate that story to a guy who had a column in Forbes. And he said, you got to write about this. This is a really cool story. So I did. And I talked about some of the stocks I was investing in, and it just went crazy. The article got picked up by like Tim Ferriss, and he tweeted about it. And then like everybody in Silicon Valley read it because you know how his audience is. Yeah. We call it the Tim Ferriss effect. So pretty soon, like overnight almost, we had 300,000 reads on this article, which is a lot for Forbes. Yeah. And the stocks start going up on a steady tick. And within 18 months, they had 10x. So it just went nuts. And they were overvalued, certainly. And I don't like to think that I started that, but there was certainly a correlation, right? That was about the time when everybody started really talking about 3D printing. And when people talk about things, the news starts to move things. So kind of inadvertently, I had brought 3D printing into the collective consciousness in a way that it hadn't been before. Mm-hmm. And somebody had invested in one of the stocks. They called me up. They said, hey, I just paid for my wedding with that stock you talked about in Forbes. How do I give you money to manage? I'm like, money to manage? Well, hold on. Let's hold on the bus here, right? Because I'm still this young kid. I don't know. What do I know from Wall Street? I worked on Wall Street for a month.
Right.
I started asking around to some of my smart friends and mentors, and they're like, "Oh yeah, start a hedge fund." I'm like, "A hedge fund? Don't I need to like get the Pope to wave a wand and say you're worthy of starting a hedge fund?" They're like, "No, it's all right. Here's the SEC regs. Here's Reg D. Here's your your third party administrator. Make sure everything's on the up. You get your audits. Here's your lawyer. You're off to the races." I'm like, "I'm starting a hedge fund. This sounds awesome." I went and made a list of 200 people that may or may not have given me money at that time that I knew well enough. And 17 of them gratefully said yes. I got better and better at pitching. I just got better and better at raising money. And I put the best team together I knew how to do. I was a pretty solid trader at this point, an investor, but I don't know what I don't know. So I brought on some really great people. And long story short, we ended up partnering with a fund. We had about 4 or 5 million under management between the two funds. And we ended up having a double up inside a year. It was 106%. We had a month where we made like $1 million. It was great. So it was really excellent. And that's how I started my hedge fund.
Awesome. And so then you get out of that, you're, got a little bit of dough now, and you get back in to the cryptocurrency space, and you're going to talk about, one of the things we're going to talk about is understanding the scope of the opportunity and how to capitalize on it. So as you're getting out of the hedge fund space and getting back into cryptocurrency, did you understand the scope of the opportunity at that time? What did you think the opportunity was then? And then you can segue to your, how should people look at this now?
Yeah. So all my success, I have to give credit to mentors along the way, people that really saw things coming before me. The only skill I have is being in the right room with the right people and making sure I actually follow their advice. That's the key piece. Because if you actually can follow your advice and stick through your convictions, you can do really well. If you get out too early, you never know what could have been. So I've learned that lesson is like, bring out your principal, but let the profits ride, free investment, essentially. And just work hard, go back to work and make more money. Right. So one of my early mentors is a guy who was, he was an engineer at Microsoft and Google, and he ran a software dev team at a couple other smaller companies. Was really geeking out on it. He was mining early and all this stuff, and he would teach everything he would know. And crypto was like super early. Crypto was very clunky, not user friendly whatsoever. And he taught me everything he knew. And despite all that, I still failed. So that was where I was at. This is probably now like 2012, 2013, and I was traveling around a lot. Doing a lot of investor meetings, and that's kind of where I started to get really heavy in it. I didn't really understand what it could be at that time. I remember getting a friend. I'll give him a shout out. His name's Tom Hudson. He lives in the Northeast. He and I had lunch at a Thai restaurant in New York City when I was living there. And it had to be like 2011, 2012. And I remember he gave me 1/3 of a Bitcoin for half of a Thai meal. So just think about that. That's like, it's been as high as $7,000 for that half of a Thai meal that he paid me. It's just absurd. You hear stories of like the $10,000 or 10,000 Bitcoin pizza that was like a $10 million pizza. It's true. Like that, nobody knew. People were just like, "Oh, this is like some cool money somebody made up." Like you could have never known. And the people that did know, a lot of them are like gouging their eyes out because they didn't keep it right, or they lost it on a computer somewhere. So you just have no idea. So anybody who's like, "Oh yeah, I saw it from the beginning," they probably didn't. They might have had an inkling, but you just never know. But the key thing is always invest in the underlying. Even if it was like $1,000, you could have done really well. So, I did well enough and I was in. I could have went in way heavier than I did. I probably should have, but I learned. I just kept refining. I just kept getting better. And, more of my trading and investing philosophy started to blossom out of that. So that was really the key learning and takeaway for me. But with crypto, like the size of the opportunity now, I think it's still early, if I'm being honest. And if I can just take a minute to frame that, I think
please
add a lot of value here because a lot of people don't think in terms of the size of things in relation to each other. So when you consider market capitalization, and all that is, it's a big scary word. It just means the number of something times the dollars it's worth. All right. So if you take a market cap, it just means, how big is the market of all these things? So this many coins times this many dollars equals this number. And for cryptocurrency, it's less than $500 billion, which is, it seems like a lot of money, right? And it is, but in the sea of money, it's actually very small. When you consider all the debt, all the derivatives, all of the stock markets, all the cash, all the different monetary instruments in the world, there's $1.2 quadrillion in the world, give or take. And it's always expanding because central banks are always printing more money, right? It's called QE. They're always easing and increasing the money supply. At least for the last 20 years, that's been the case or so. So one of the key things to understand is that when you compare what seems like a huge number to a massive, it boggles your mind, like a million billions. That's what a quadrillion is. It becomes pretty small. It's less than, a tenth of 1%. I think it's like 24th of 1% of the world's money supply. So let's say in the future, some point later in time, maybe 10, 20, 50 years, who knows, that crypto becomes 1% of all money, just 1%. Well, that means you still have a 24x possibility of upside from here, which is pretty staggering when you think about it. Who wouldn't want to make 24 times their money in their lifetime? That's like Buffett numbers, right? So I think it pays to have a small percentage, not money you need for rent, and not money you're not okay with losing, because there's still 50 ways the whole thing could go up in flames. But a percentage of your money future-proofing your portfolio so that if it becomes huge, you are not left behind, right? And like I said, I'm a lifer personally, so don't take my word for it, do your own research. But I'm pretty convinced that it's going to be around in some form or another, and I want to have skin in the game, so I pay attention to it. If you don't skin in the game at all, you don't pay attention to it. Even if it's like $100 or something, at least it's enough for you to like watch it every once in a while, or be like engaged in the process, because there's so many things that our attention is being vied for. We can't always focus on things, but you tend to pay attention to what you pay for. So that's why I like to have some skin in the game and things that I'm interested in, even if it's a small amount. I do this with stocks too. Like I'll buy a little bit just so I watch it.
Yeah. That's a great point, by the way. That's a really good point. And honestly, I think I've got a friend of mine, Kevin Nations, and I'll give him a shout out. And
love Kevin.
He's awesome, man. And we were chatting one day and we were talking about this investment thing that he did. And he lost like 15 grand. And then he was making it back. And he said, if I wouldn't have lost that money, I never would have really paid attention and went hard. And so I think that's what you're saying right there. If you're a little bummed because, you got in maybe in December, that may have been the best thing to ever happen to you.
Yes.
So I think that's a good point, and that's something nobody else has brought up. So thank you.
I just want to give a little more perspective too, is that we did surveys, because we did a course earlier this year, as I mentioned. We had respondents, 80% of respondents say they had never invested in anything before. And cryptocurrency was their first investment ever in life. Like they never owned a bond or a stock or a piece of real estate. First investment, 80%. That's staggering to me.
It is. It's
4 out of 5 people know nothing. They don't know their ass and their elbow in the space. So I felt the need, like the calling, like, hey, I have to step in front of the hucksters and like try to give these people reasonable, sound advice about how to frame this opportunity, because I've spent my entire adult life looking at this stuff.
Yeah.
You possibly not gets caught up and sucked up into what's perfectly human, by the way, to make emotional decisions and try to back them up with logic. You can't operate that way in the markets, because you get chewed up and spit out. And that's what happened to most people this year.
Yeah. I mean, I think we were talking, you're an Amazon guy, Ryan Moran was on, and we were talking about, there's a fine line between, investing and desperation, right? Mm-hmm. And so I think people, they're desperate, man. They want freedom. They want to make more money. We all want the same thing, and it's to be free and to have a great life. And so sometimes, that desperation leads you to do things like, you're grabbing onto anything you can. And for a lot of people, that was Bitcoin and cryptocurrency. And then, when it fails, those are the folks, unfortunately, that get hurt in stuff like this. But it's just the way all markets go. Would you agree? What do you think about that?
Yeah, I think that people don't understand risk. You gotta train yourself to understand that life isn't certainty. It's shades of probability. Right? There's like all kinds of things that can happen, and nothing's really impossible. It's just either very likely or very unlikely. So you just got to kind of get really good at kind of seeing what events are relatively likely or could happen within your lifetime and planning for those events. It's the same thing with investing. Like there's a discrete possibility that all cryptos could go to zero. There's also a discrete possibility that could go to a bajillion, right? We just don't know. It's probably somewhere in the middle, right? Because those are two very extreme events. But the likelihood that you will regret investing in it versus not investing in it, it just depends how early you are, right? Awesome. And how long you're willing to wait and how long you're willing to think about it. And if you are the kind of person who can just put an amount of money that you're okay losing and just forget about it for 10 years, or maybe look at it once a year and say, all right, here are the top 10 cryptos. I'm going to split the amount of money I'm okay losing amongst these 10 cryptos. And then next year I'm going to do that again and just rebalance, that could be a really great strategy because you have exposure to this asset class, but it should be on top of the pyramid, right? It shouldn't be the very base of the pyramid or the foundation of the pyramid. It should be like cash in the bank, 3 to 6 months, depending on whether you have a family or not, right? If you're single, you can get away with 3 months. 6 months is not. That's the best insurance, right? It's just having that extra buffer if something happens. And then it's like, all right, what insurance? What can you insure and get your risk off the plate? That's what insurance does, life and otherwise. It allows you to not have a catastrophic event take you out of the game. Next is like, stocks, bonds, gold, things like that are portfolio assets that you can easily get liquidity out of. And then real estate would be a little bit higher than that because it takes a lot of time, energy, and attention on real estate and do deals and get the right real estate and get it running right. So I put that higher than because there's a lot more time and energy and attention risk as opposed to just money risk. And you can balance portfolios using Dahlia strategies, Swenson property, whatever. Anyway, long story short, crypto is on the very top, right? It's risky as risky gets. It's like angel investing. It's like, VC. It's like investing in movies or, tax liens or something crazy high risk like that. Yeah, tax liens might not be that bad depending on how you're doing it. Anyway, long story short, like you need to be able to invest in a lot of deals or a lot of ICOs or a lot of cryptos in order to find the ones and sift through the ones that aren't crap. You got to be able to invest in 20 startups in order to find the one Facebook. And you just don't know, right? I use the orchard methodology, and it's my great grandfather. I'll just tell a quick story. He used to own orchards out on Long Island, and it was mostly land. He would just, clear cut the land. He owned the land, but there was no demand for housing. So once he clear cut it, he would plant orchards. And he had a saying, he said, an orchard's not one tree, John. An orchard is 1,000 trees. And I plant 1,000 trees knowing full well that some of these trees are going to live and some of these trees are going to die, but I have no earthly idea which are which beforehand. So I'm going to plant a lot and water them all and eventually have a thriving orchard that bears much fruit. And if you can invest that way and think about it in the long term and not be after the quick hit, you're going to be in much better shape. And ultimately, you'll be able to go through the swings that allow you to hit the thing. Because anytime you zoom in on a timeline, an investment timeline, and what I mean is like look at your charts, look at your technicals, and you zoom back. Like there have been 90% drops in Bitcoin back early on. The one we just saw actually as a function of percentage wasn't that bad. And it was just bad because there were so many people in it that were complaining and crying about it, which I get, I understand, but they were over leveraged or they were in too high or they got greedy. And it's just, you got to learn, right? And this is a good learning experience and hopefully people didn't get hurt too bad.
Yeah, totally. And I think your investment advice there is great advice because, you're an entrepreneur. And so entrepreneurs, we're pretty risk tolerant, right? That's our whole daily living. Tell me what you think about this. I think as an entrepreneur, you want to have total focus. I think as an investor, you almost want to be detached. And I think you can be detached when you have a plan like you're talking about. Because it's not all your portfolio.
And guess what? The fastest path to wealth is still earning money and adding more value and scaling that. It's building businesses. It's if you're going to be an entrepreneur, tie your success to the success of the company and work like hell. If you're going to be an entrepreneur, you take on more risk, but you can get higher percentage of the upside. But that's the fastest path to wealth. It just is. Increase your income.
Yeah.
And then everything that's excess of what you need to live and keeping your lifestyle modest, you can pump into investments. And if you do it in the way I just described, then that's a wealth plan that'll last for generations. And there's obviously a lot of expertise that go into how to allocate. But that's a very basic framework that can work really well for most people. Other people might say, all right, well, I want to have some in risk and some in really low risk. I use the barbell strategy. And that's also, I think, valid in some circumstances. It just depends on your age. Everybody's a little different. That's why there's no one size fits all for investing or entrepreneurship or anything like that, because you all have different strengths. You have different amounts of time and experience that you can put into this. So I just like to give people a good overview of how they could look at it so that when they come to me, they have a good framework of saying, okay, I want to go there. What do I do? How do I drill down? And that's really important to me. It's like I got into crypto not because I wanted to make a quick buck. I was already making money at it. I just wanted the people who were getting into it, who I knew had no business being in it, not get hurt as badly as possible. I was writing about USI Tech and BitConnect. I'm like, these guys, these are Ponzi schemes. I'm just telling you right now, like they have all the signs of a Ponzi scheme. I can't tell you 100% whether they are or not, but I would not invest in these. I wouldn't even touch them with a 10-foot pole. And of course they did, a lot of them, and they got hurt. And the signs are there. All you can do is warn the people that'll listen.
Yeah, definitely. And let's talk about this. I want to come back to your philosophy, your investment philosophy in a second, but let's talk about how do you figure out which coins to buy and which ones to avoid in this space? What are you doing to kind of cut through some of the noise there?
Yeah, I just go on popularity and market cap. That's my main metric, because fundamentals, throw them out the window. There's no fundamentals in this space. There just aren't. It's not like a publicly traded company where they put out a report every 3 months to tell you what's happening with the health of the company. There's nothing there. It's all speculation, right? So cut that one out. Technicals, actually, this market, it behaves fairly predictably if you understand technical trading, more so than the real market does, that's for sure, because it's not run by bots yet, which is nice. HFT bots haven't destroyed it. Price action is pretty easy to read as well, because the tape is relatively unclustered by bots, and there's not a whole lot of fake orders and spoofs and stuff like that. So that's cool. Sentiment is, it's been reasonably bullish, and then it kind of simmered, and now it's like it was bearish for a while, and now it's kind of neutral. And then finally, news. News is all over the map. I try to ignore the news as much as possible, excepting truly well thought out pieces like Roger. Actually, I just want to give a shout out to Roger Bryan. We actually shared a stage at the Mavericks last year. We gave a presentation to 120 millionaires at Cam Maverick, which is awesome and totally impromptu. Literally an hour before, Yannick is like, "Hey, you ready for your presentation in an hour?" I'm like, "Yannick, did you forget to tell somebody about this?" So I'm like there with my notebook, like writing furiously, but it's great. And we had a bunch of questions, and that's one of the reasons I started doing more of this, because I realized just how ill-equipped people were to invest in this asset class or even look at it and understand it properly. So I want to give him a shout out, because that 15-point thing he put together, we made some tweaks to it, but it became like a scoring system for ICOs for us.
Oh, cool, yeah.
We give them like a 10 or more, that's like a green. If it's a 5 to 10, that's a yellow, and if it's a 5 or less, that's a red. And one of my things is I want to own 25 ICOs that are a green, or 15. Close to 15 points as possible, because it's just like if I have 25, maybe I'll catch 1 or 2 that are huge. It'll make up for all the other losses. And I'm not betting big on any of these. I just want to be clear on that. But I'm investing through syndicates and getting in pre-ICO. I'm doing the best I can. So.
Yeah. What do you think about right now? Because I know you do some trading. You're an experienced market guy. Bear market can be, sideways market's great for trading. Bear market can be a disaster unless you can go short. What are your thoughts on where you at right now with trading this market? Are you on the sidelines kind of waiting, or?
Yeah, I've got my original portfolio, which I don't ever intend to sell, right? If it goes to zero, it goes to zero, but I'm a lifer in that regard. I trade for fun now. I don't trade, it's a 24/7 whipsaw market with a lot of really irrational participants, and it's all over the world. It's not like, I liken it to, when you compare it to the early days of the financial crisis, I'm talking about the 1999 one. Like that was one market that was relatively well regulated in one country, where there's a lot of institutional money at play. We have none of that. Like this is worldwide, global. Everybody with a cell phone can participate anonymously, 24/7, all the time, and do whatever they want in asset classes that are, frankly, kind of scary to trade. And there's a lot of slippage and weird stuff happening. I have no interest in doing that on a daily basis. So we've actually built a bot that trades for us, which we started with. It was a project, just a little side project for my friends and I that knew about this stuff. And I was kind of advising on strategy, and we just started building it. Every Sunday we would like to knock out 3 hours worth of work on it. And 3 months later we had a bot that trades cryptos. That's fun. And giving a shout out to Gunter over at Gunbot. That was the shell that we started with. And we started kind of building on top of that. We added like trading view and pretty charts, and now it just trades. And it's pretty cool. So, it trades my strategy, and I just let it sit, and it's been doing okay, not great, but during the bull market, actually, we would have done better just buying and holding in retrospect. Yeah. But now with this choppy market, it's actually capturing some of this volatility and some alpha in this volatility, which is kind of fun. So, I don't have I didn't prep the exact numbers to.
Yeah, no, it's all good.
The last week or so, but it's kind of just doing its thing, and I look at it, and I just like to snipe little trades when I think it's irrational. Like Litecoin at $368, I just saw was crazy. Like it was higher on Coinbase than any other exchange. I took that down. I got like one of the highest prints on Litecoin. I was pretty happy with that. Stuff like that. I just have fun with it.
Yeah, awesome. No, I think that's great. I think that's good strategy, and I love talking to people that are not delusional. So there's a fine line between vision and delusion, right? So I think sometimes, people can go a little in excess. And so it's always nice to get a rational voice, which thankfully most of our contributors have been. So, all right. So you're kind of right now we're in this bear market. Where do you see institutional money come in? How far away do you think that is? What are these guys waiting on? I know you don't have your crystal ball, but just spit.
This is actually really fun for me because I follow them very carefully. So I'll start with JP Morgan. So JP Morgan, Jamie Dimon, the CEO, comes out last summer and he says, I'll fire anybody who trades Bitcoin at JP Morgan and their subsidiaries. Market predictably tanks for Bitcoin, right? Because he's a big CEO and a bank and he's got some clout. Next day, the market tanks. 9 JP Morgan subsidiaries buy Bitcoin. It's on the blockchain, can't hide it, right? So they buy a ton of Bitcoin at a very discounted price. Then 6 weeks later, he comes out and says, hey, by the way, I was wrong. Blockchain's for real. Crypto might be too. By the way, coming soon from Chase, business blockchain. I'm like, come on, man. This is like the epitome of hypocrisy. So, hyperbole aside, I think it's happening over and over and over again. You see people and pundits coming out and smashing this thing. Warren Buffett has had for the last 70 years said, or whatever, however long he's been an investor, a long time, said, never invest in anything you understand. And now he has an opinion about cryptocurrency, which I can guarantee he does not understand.
Yeah.
Come on, Buffett.
Yeah, no doubt.
You want to talk about value investing and discounted cash flows and buying companies and Berkshire Hathaway? Like, I'll listen to you all day long, man. But don't come into my space and tell me what's what. That's ridiculous.
Well, and so here's the thing we should touch on with that. Because I see so many people, and this is why, like, your stuff's really good, Roger's stuff's really good, everybody's stuff's good. There is no better or best. There is just different.
Yes.
Right? So when these guys are coming out, okay, yeah, he's a value investor. He certainly doesn't speculate in cryptocurrencies. And what he does is good for him. And maybe what you do is good for you. Timothy
100%.
Sykes is on. He's a penny stock trader and he crushes it with that. And you know what I mean? And so
I learned a lot from Tim, by the way. He's got a great program.
It's like, I think people need to get away from this. There's one way to do everything.
Yeah, I get a little miffed when I can tell that they're using their influence to crash the market so that I think their friends and them can buy more, right? That's just the game that's being played right now. And it'll work as long as it works, and eventually it won't work. But right now I'm seeing a lot of acquisitions in the space. I'm seeing the NASDAQ wants to list crypto. I'm seeing that, the Gemini is getting picked up by everybody and their brother. The Winklevi's putting a ton of money into that. They're early investors in Facebook. You see Goldman Sachs buying Polynex, one of the biggest exchanges, through their subsidiary Circle. All these things start lining up. I could probably come up with another half a dozen examples to say, okay, institutional money wants to get in as fast as it can. But here's the caveat. You have to understand, I talked about this earlier. It's a very small market. If you're Goldman Sachs and you have trillions of dollars that you want to put under management, what's an amount of money you need to put to work for it to even make a difference? It's like billions of dollars, right? If you put billions of dollars to work in crypto right now, who's taking you out of that position?
Right.
It's not enough of a float. If you put in $5 billion into a $500 billion market, you're 1% of the whole market, right?
Yeah.
So, there's no counterparty that's going to take you out of that thing, and there's no liquidity for you. And there's a huge custodian issue, right? These banks have to play by the rules of custodianship, which crypto is really difficult because it's like you lose your keys, you lose your coins, that's it. Who are you going to trust with $1 billion worth of crypto, even in your own firm?
Right.
It's like there's a lot of problems with it. It's going to take time before they can really play like they want to, but gosh darn it, they're getting in as best they can, and they're trying to find ways to do that, but they got to manage their risk. So when you see a way for these doors to open up for these investment funds and these institutions, you're going to see the market have to rise, right? Just for the sheer volume that they need to play at. I think it's inevitable, but we're not there yet.
I do too. I think that writing's on the wall with it's not if, but when these guys are going to come in. So let me segue to this question. We kind of touched on this earlier when we were talking about who knows what the crypto market's going to do. But right now you have this 24/7 world market. You have companies going, entrepreneurs going, raising money on this unregulated world market. Do you think that market continues to expand as its own world market, or does it maybe get consolidated into different markets across the world?
Yeah, that's a good question. I read an email. I'm sure you guys are familiar with Simon Black at Sovereign Man. You've ever heard of him? He's a pretty interesting thinker. He's got some cool stuff that he writes about. And he just posited the idea that, innovating around coins, I thought that was an interesting and potentially scary thing for crypto investors. And just to, provide a kind of a different perspective, like there is a massive incentive and billions and trillions of dollars invested and being invested into maintaining the status quo. And the status quo is fiat currency and central banking. So if the central bankers can't beat us, well, they're going to join us, but they're going to join us in a way that's beneficial to them, right? They're not going to just say, all right, screw the dollar, let's go Bitcoin. No, of course not. They're going to find a way to participate on a better system that serves more people, but with their, their thumb on the pulse, right? And their ability to control it, right? And an entirely distributed network of computers that nobody really owns, it's not central banking. They don't want that, right? And they got to find a way to marry the two. So he postulated perhaps a blockchain without the coins that just tracks fiat in a more, public ledger type of way, like using the benefits of blockchain with the original system. And there's a lot of people raising a lot of money. Andreessen Horowitz is backing, and Pantera Capital and Blockchain Capital, all these different funds are backing, like Basecoin, for example. It's trying to solve that problem. But whoever gets there first and gets, more importantly, the adoption of the people in power, because money is a tool of power, but it's not power itself. I just want to remind everybody that money's just money. And the powerful elite have a lot to lose, and they have the influence and they have the assets to back up their positions, and 'twas ever thus, right? So I think that, with regard to your original question, segmented markets, fractionated markets, I don't think that's even the thing to look at. I think it's really like, who's going to end up winning the day? Is it going to be the little guy? Unfortunately, the reason that most wealth gets consolidated in certain hands is because they know how to play the game better than anybody else. And that will continue to perpetuate itself and compound itself. And then the laws and the structure of society set up so that those people can win easier if they're in that position.
Yeah.
Because they write the rules, right? Through lobbying. Simple as that.
Yeah, no doubt. So here's an opinion question, and it's kind of a hard one to answer. So, and I'm asking you because you come from a regulated environment. You're a hedge fund manager, and there are certain things that you have to do when you're a hedge fund manager, certain disclosures that you spoke about earlier. One of the things that's cool about this market is that new investors could get into projects that were normally, reserved for accredited investors. And the SEC does that here in the United States. Obviously, it's different all over the world, but I'm talking about the United States because we're here. The United States does that to protect its investors. So you have this sort of rub, right? You got on one side, they're not letting you in, so you don't get the opportunity, and the rich get richer. And on the other side, they're protecting you from some of these ICO scams and the USI techs and things. Where's the balance here? What do you think about that? Are you a decentralized guy all the way, or you think regulation's important?
Regulation's very important. However, those laws were written in the 30s, and they still are basically unchanged till today. So you have 80-year-old laws. They're still governing the way people invest in 2018 that, honestly, like, they need an update, because accredited, just because you have a certain amount of money, does not mean you're sophisticated, does not mean you know what you're doing. And vice versa. Just because you're not accredited doesn't mean you could know what you're doing entirely. Like, I know that you can learn this skill. I've learned it. And, I'm not a deca millionaire or anything like that. And I'd like to be one day, but, it would be nice to know that the average people with more information than they've ever had access to before, where it's like, those laws were written to protect farmers in places with no information, no access to information. Now everybody has access to everything on their phone. They can find opinions, they can find data, they can find the things that they need to make reasonably rational decisions. I feel like it needs an update, right? It needs an overhaul. And I'm not smart enough to know how it all needs to work, but I do know that whenever you have a system that's 80 years outdated and laws that are 80 years outdated that aren't really making reasonable progress, like the Jobs Act kind of goes a little bit and does some stuff, but I just don't see it. I don't see it loosening up the way that it needs to. And that's why a lot of these crypto projects are offshore. That's what makes them scary and dangerous to most US investors. So I kind of see it from both angles. Like, yeah, I don't want to see people getting hurt. They're going to make idiot decisions regardless, though. So why not at least allow them to have access to what could be theoretically better investments, with maybe taking the onus off of who can invest in what and putting more money and the longer reach of the law, put that into enforcement of the statutes that need to exist, like catching fraud cases and following up with SEC complaints, which happen. By the way, the SEC is overwhelmed with crap. Like, they just can't service it all. It's like, if you take all of the accredited stuff and move it over to that and stop worrying about who's investing in what, but just make it like, catch those bad actors and penalize those bad actors and make it like it shouldn't be like you get a slap on the wrist for white collar crime, and if you get caught with a joint, you're in jail for 20 years. That's ridiculous.
Yeah.
When you bilk people out of $100 million and you go to jail for 6 months and it's like a resort, that's ridiculous. And we're incarcerating people for drug crimes for years and years.
Yeah, there's definitely work to be done there. And one of the things that startles me about that again, I know we have a world audience, but from here in the US, and I'm not anti-government at all. I'm not anti-regulation.
We need regulation. Otherwise it's just the sharks will play,
Yeah. But two things that stunned me. So the SEC chairman, I totally understood and appreciated what he said a couple of days ago, but he was like, hey, we're the beacon of the world for, our securities laws, and they're the best and they're working. And so it was pretty much like, hey, we're not going to touch it. And you combine that with like the Senate hearing for Facebook, and you see like just how out of touch some of our administrative government is. I mean, they can't figure out the internet, what the internet does. How are they going to work on blockchain? So I think that it's just like, we all need to be aware of that a little bit.
Yeah, and it's kind of just goes to show you can make any case for anything, right? There's going to be somebody caught off guard or looking idiotic. It's like those Jimmy Kimmel videos when they go out and they ask people, hey, name a book, and they're asking people in Times Square. You can edit it to make it look like whatever you want, right?
Yeah, true.
But it is a little bit scary when the guy who's on the Facebook panel doesn't understand how Facebook makes money. Just, that being said, the other side of the equation is there are a lot of really diligent and dedicated public servants. You can't paint them all with the same brush, but yeah, there's a few people who are out of touch, certainly. But guess what? That's humanity, right? We do our best in all situations. And that's kind of what drives me forward is just like, how can we make the world incrementally better over time? And it's getting better. It's getting a lot better. And systems like blockchain and cryptocurrency will help catapult it even faster. The rate of change is increasing exponentially, geometrically. It's amazing. We live in the best time ever. I have a cell phone in my pocket. This is basically a supercomputer that I could talk to anybody in the world with that didn't exist 10 years ago. It's pretty amazing.
Yeah. Yeah. And we've got 50 people from all over the world that have been live via the internet. Yeah.
Are we getting any questions, John? Let's answer a few questions.
I don't, let's see here. Let me ask you some questions. So let's talk about, because I don't see any questions, but I'm not surprised because quite frankly, I don't let them ask them a lot. I just sort of, I've got all these questions, and I get into it and I start thinking about stuff. So a lot of people are just kind of taking in what you're saying. Share you started this a little while ago, but share your investing thesis with folks. You kind of talked about that, but let's really, we've got about 15 minutes. Let's really dive into that for a second. And then I want to talk about your crypto cheat sheet.
Yeah. So I talked about the orchard and I kind of alluded to the other thing, which is my mosaic strategy. And mosaic is, several points of light or pieces of a puzzle that make up a larger picture, right? No one piece is the whole puzzle or no one point of light is the whole painting. But when you put them all together, it starts to make a pretty clear picture. With me so far, there's the analogy. Yep. 5 things that the mosaic strategy are fundamentals, technicals, price action, sentiment, and news. And like a lot of people, they just look at news, right? Warren Buffett would say, just look at fundamentals, right? So those are 2 opposite extremes, right?
Explain to everybody what that doesn't understand what fundamentals.
So fundamentals are like the quarterly reports, earning statements, balance sheets, income statements, P&Ls, whatever that a company, that's regulated, which is another reason the regulation is good, to put all that data out. And it's got to be generally accepted accounting principles, and they can't fudge it. And if they do, they'll be in a lot of trouble, right? That's what you need to do to be a publicly traded company. There's none of that in crypto, as I mentioned earlier. But in the stock market, hell yeah, you can go look up any public company and you can see their latest quarterly reports and earnings and all that. You can vote and be a shareholder. It's all this great stuff that we have. And that's pretty amazing when you think about it. So that's the one piece. Technicals refer to what's happening on the charts. What's the past price performance of this particular asset? And by kind of looking at where it's traded and where the resistance levels and support levels are and a bunch of other things that I don't want to talk about right now, you can kind of get a sense of, all right, where is this thing possibly going next? And then you go to price action. Price action is what's happening right now. What's trading right now? Who's buying? Who's selling? How deep is the level 2? How much volume? Like how fast? These are all things that tell you about what's happening in the market right now, so you can make short-term price decisions. Then you're looking at, and you also get a sense of how a stock behaves and who the big players are. So I'll just share a quick, another Buffett story, which is super fun. When I was trading in my funds, in 2012 or 2013, I had a position open, because you only look at a certain number of stocks if you're a trader. If you look at 50 stocks, you're not going to understand like the little nuances that you need to trade. But if you look at like 5 or 10 or 15, you can get a really good sense of a stock and what's right and what's wrong, what's normal, what's not. So Exxon is this big blue chip stock. It never moves whatsoever. And when it does, it moves big because it's a $400 billion market cap, right? Really big stock. Or whatever it is now. I haven't looked in a little while. I think it's like 400 or 500 billion. Anyway, so when you see this buying pattern start to show up, and you see these investors start to buy up all the shares on offer, and very consistently let it like a little bobber, on the compound, you kind of start to see that, you get interested. So I bought the way out of the money calls. I think it was like $80, and I bought the 90 calls, on a hunch. I was just like, this is new and interesting, and I think this might move. Meaning
a call that you thought it would go up. Just
correct. So a call option is very simply just a contract that allows you to buy a stock by a certain day by a certain price. It's called the strike price. And then if you are above that, you're in the money. If you're below that, you're out of the money, and it's worthless at the end of the time. Anyway, and puts just the opposite, selling versus buying. So, I had the calls and they're way out of the money, meaning, my strike price hadn't been reached yet. And I bought a ton of them, and I'm waiting, and I'm seeing like the price starts to trickle up, and I'm seeing like huge volume on the tape, and I'm watching the price action. Like, that's very uncharacteristic of a big stock like that. And for somebody to move a stock like ExxonMobil, a $400 billion market cap, they got to be moving big money, billions of dollars, right? Because the float is so big, and there's so many shares on offer and all that. They trade them in 10,000 share blocks and stuff like that. I saw that, and I held these things, price started trickling up. The next week, Warren Buffett turned out was buying $3 billion worth of Exxon stock. So my thing was validated, my trade was validated, and the stock shot up past $90, and I made tons of money. I picked up these calls for very little, and I ended up selling them for quite a bit. And it was like a 2,000% return rather. So that was
nice.
Massive. So that's what price action can do if you get really good at reading tape and understanding what's happening. So we talked about fundamentals. That's the hard data and numbers. We talked about technicals. That's the charts, what's happened before. We talked about price action, what's happening right now, and how can you make pricing decisions short term. And then finally, the stuff you wouldn't really pick up on the charts. They would just, you wouldn't really see it that well. And then moving on to sentiment. Sentiment's just a broad category. It's like, is it bullish, is it bearish, or is it neutral? What's the sentiment of the market? What are people really overwhelmingly saying? So it's, bullish is just more buyers than sellers. They're pushing the price up. Bearish is more sellers than buyers. They're pushing the price down over time. And then neutral is neither is in control. They're kind of duking it out. And that's kind of where crypto is right now. It's trending towards bearish, but it's pretty neutral right now. It hasn't broken any key resistance levels or support levels, at least not since I looked at it a couple days ago. Anyway, finally, there's news. Most people just look at the news and buy and sell based on that. Oh, I think it's going up. I think it's going down. But they're like missing all these other things that actually move the stock. The news is important because stock, definitely gets moved by that. Crypto gets moved by that.
Today.
Yeah, it's part of it, certainly, but it's not the whole picture.
Yeah.
If you want to have a long-term reason strategies, you got to really look at these 5 things and keep them in perspective. And that's what I call the mosaic strategy. It makes up the whole picture. And just that one strategy, by the way, you can use for the rest of your life to look at any asset that's being traded on the market. It'll just give you a really clear picture if you just think of it as a mental checklist. What are the fundamentals, technicals, price action, sentiment, and news right now? It gives you a clear snapshot, and then you track it over time. You just keep track of those things.
Awesome. That's great. That's great strategy. Now, I have 2 more questions for you. So first question is, and I'm stealing your question, right? It's theft here. So what are you excited about in this space?
Honestly, I'm excited to see how this changes the world. And what I mean by that is like, there are problems that can potentially be solved by blockchain, and people they have a lot of Yahoo ideas. I've looked at 250 deals easily in blockchain, and I've only seen a few that I really like, and I'm investing a couple, I'm advising a couple. Most of them are just total pie in the sky nonsense. What I'd like to see in my heart of hearts is to, a little pun on my name there, is to see people who are solving real problems, adding real value to the space, specifically in the idea of fraud. Like, I really think fraud is a huge thing because, again, if you can increase trust and decrease friction, the world gets a lot faster and a lot more value can be added. So that's one thing. Most of like economics is decision making. So if you can make it easier for people to make decisions and less fatal if they make the wrong decision, awesome. But like, what if we had a time machine type thing for finance where like in a company or in a country even, all the transactional records are there. And if there was something fraudulent that happened, you could literally just roll it back to when it wasn't fraudulent. I always think about that, like customer data and like, I had my data stolen with the Equifax hack. It was crap. Which one was it? Is it Equifax or Experian?
Yeah, one of them. I thought it was Equifax.
40 million Americans got their stuff hacked, and I'm like, this is nuts. Like, we got to think of something better than this. So I had to freeze all my credit, and it was a whole thing. It's traumatic, So with blockchain, I think we can do better. I think we could decrease the rate of fraud and eventually make it to where fraud is impossible. And fraud, just by itself, is a $500 billion a year problem. There's whole buildings full of people that just do fraud stuff, just fraud prevention and recovery. So knock that problem out. Healthcare, medical records, voting, real estate. I mean, think about how many people are in a real estate transaction, especially a commercial one. Like hundreds of people touch a deal.
Yeah.
When you talk about all the lawyers and all the bankers and all the real estate agents and all the, the buyer, the seller, the title people, the baker, the quaker, the candlestick maker, at the end of that whole thing, you got like 100 hands that touch this deal. What if you could collaborate with confidence? I came from a real estate background when I worked in New York. We might have 25 people touch a deal. How do you track and pay all those people, right? It's normally just the people who work on the deal and close the deal that get paid, and then a whole lot of people being broke. And it would incentivize people to work more together in deals like that. And you can, take that and plug it into any industry where there's like a huge sales pipeline. And that's really what it is. Like, you want to be able to incentivize people for the work that they do and the contribution that they create. So now you can rank and score and incentivize people based on their contribution, which is completely tracked on the blockchain. There's no way to fudge it. Now that gets really exciting for economics, because now you have incentivized behaviors. Because the number one management conundrum in business, and always has been, is you incentivize for option A, or you want option A, or you want behavior A, and you incentivize for behavior B. And then you always have conflict. You have people politicking and fighting against each other and not being as great as they could be if they were to collaborate with one another. And you might say, oh, well, it's just capitalism and that's just that. But guess what? Capitalism, we're at the end. I'm sorry to say. And Ryan is he's going to have a blood vessel burst when I say this. Like, AI and robotics are going to ruin most of the economy as far as what jobs we can actually do and compete in. Like, the vast majority of humanity will be, replaced from a productive perspective. So we're going to have to either have new things that we can create that we don't even know about yet that are going to be valuable that only humans can create, or we're going to have to come up with a better game to play. Because right now we play this finite game where there's winners and losers, and the rules are set to decide whether there's a winner or a loser. Who are the winners and losers? And the winners can win more because they have certain, as I said earlier, incentives in place and laws in place that keep them winning. And then the losers, unfortunately, it's a losing cycle, right? And it gets worse and worse and worse. And the cost of living goes up and up and up, and their assets get worth less and less and less, and their purchasing power goes down and down and down. So how do we play an infinite game? There's a really great book called Finite and Infinite Games by a guy named James Carse, who was a visionary in my mind, and check out the book if you like. But the basic idea is, like, how do we create an infinite game where the rules only exist to keep the game going so that more people can win? So there's no end to the game. There's no finite game. There's no grabbing for all the marbles. It's just making more marbles. And I think with this resourceful future we're creating, we can train people to think like entrepreneurs, investors, and philanthropists to generate, grow, and give more through this new economy that we're creating, which, whatever you want to call it, post-capitalism, proto-capitalism, some new thing, I don't know. I'm not that smart, but I think we need to keep evolving our decision-making, which is all that is. Economics is just the best we know about human decision-making right now. And it's mostly 5 years out of date, because by the time you get around to putting your finger on it and saying it's this, it's already changed. And it's changing rapidly. And crypto is a perfect example of how rapidly it's changing, and nobody can even keep their eyes on it. So the experts are not experts. You have people come out of the woodwork that have just said, I'm the expert now, and this is how it is, and then it's gone again. And it's really difficult to put your finger on it because it's evolving so fast. So I'm just really excited to see what's coming next in the world of economics based on what's now possible with crypto and other blockchain-enabled assets and businesses. It's really exciting.
Yeah, very fun, man. It's definitely a changing world that we're living in. It's super exciting. We're going to close it out, but I want you to tell everybody about your bonus gift, the cryptocurrency cheat sheet.
Yeah, guys. Thank you so much, John, for having me, and for everybody for listening. If you want to check out our cheat sheet, it's all my combined writings and just the basics to get you started, like really understanding the space. People beg me to write it, and I've been updating it every week, and I've gotten tens of thousands of questions now. It's an absurd amount of questions. So it's all great. Check it out. It's at mmm.makemoremarbles, one word, .com/crypto, CRYPTO. That's mmm.makemoremarbles.com/crypto. And you can get the cheat sheet there. you'll be on the list. We'll send you some other great stuff along the way. I publish every day. I put out a lot of value. So I'd love to have you there. And thank you so much for listening. And I'm just grateful for the opportunity. Thank you, John, for having me.
Yeah, it was awesome, man. And that link should be under the video for everybody so that they can check that out. In closing, one of the things that I want to remind you about, and I appreciate Brad, and I'm going to give a shout out to him here in a second, but I want to remind you that you can get this entire summit, including Brad's talk, through our cryptocurrency training kit. All of the videos, audios, transcripts, bonus gifts of the 35 plus speakers for only $297. You will also get a training that Roger Bryan and I put together called the Crypto Mastery Program. One of the things that I think this is so awesome and important, and I said this before, and this is sincere from me to all of you watching and that will watch this, eventually hundreds of thousands of people will see this. I, think I'm okay smart. I'm not like brilliant smart like a lot of our speakers. But one thing I'm smart about is when people say things to me and I hear them over and over and over again, I catch on. And so here's some of the things that have happened in the 50 plus people that we're talking to. They're talking about supply chain stuff. Other guys are talking about medical records and how important blockchain is going to be there. You've got guys talking about protocols and how important they are. And not just one guy saying, oh, protocol, but you've heard it now 7 times. You hear medical records. I think, Brad, you're, number 8 that have said that. and so when you listen and you're like, medical records, and then maybe not tomorrow, maybe not 2 weeks from now, but 5 months from now, when this blockchain company comes out, it's going to focus on medical records. And you're like, holy hell. Right? It comes together for you. And that's, kind of how you can piggyback off of some really bright people. So I highly encourage you to pick this training kit up so that you can reference it. It's also going to be a great time capsule for you to go back, 5 years from now and say, hey, what'd this guy say about this? And, oh man, he was right. And I'm glad I listened to him. Like Max Wright, one of our speakers, told me to buy Bitcoin at $90. I did. And now I'm like, ooh, I'm glad I listened to Max. And so when Max says something, I'm like, what's Max saying? Let me get that down. So either you're going to be, oh, I'm glad I listened to him, or damn, I should have listened to when that guy said that. And you're not always going to be right. You're not always going to be wrong. But I think you should pick it up. I think it's a great value. Brad, to close, man, I appreciate you, dude. You did an awesome job. You were fun to talk with. So thanks for being out here. Thanks for spending the time. It's an hour, man. I know we're all busy. So thank you again.
And thank you. And I just want to say, guys, I love Roger and John's content. I watch it all. I check it out. I'm in their groups. I know them personally. They put out only the best stuff. So, we're all in it to learn and learn from each other. And I've learned a ton from them. And I'm just grateful to share what my little take on it and my perspective. But yeah, I recommend, guys, this is a steal as far as content goes. So go for it.
Yeah, I appreciate that. Brad, thank you. To everybody watching, thank you. A final shout out to the team again from sincerity. Somebody said to me today, oh, I bet you're glad that this thing is over and you can rest. I said, it's easy for me. All I had to do is show up and talk to really smart people, and that's super fun. The team, Richard, Sarah, Letitia, Ryan, Stefan, Denise, Erica, Todd, our whole team that puts this thing together, Roger, Adrian, herding all of these speakers and doing everything that they do behind the scenes to put on a professional, amazing production. I cannot say how grateful I am to them. So thank you for all watching. Thank you to the team. Thank you again to Brad. We'll talk to you soon.
Thanks, guys. Have a great night.